I can certainly see another March 2020 event where the printing is really aggressive and large. I mean, in my view, and I just wrote a quarterly report, and it's on my Twitter feed, it's on my website. In my view, there's a very high probability that sometime in the next 6 to 12 months, I should say, something breaks again in the financial system. I mean, the Silicon Valley Bank CRE issue, and in that case it was government bonds, but it's being followed by other banks having problems with CRE, commercial real estate. I think that's a problem, and it's going to surface at some point. And when it does surface, that the Fed is going to bring, fire trucks. They're going to come in and they're going to aggressively try and make sure things don't get out of control.
Is that good or bad for Bitcoin?
Oh, it's
price?
Good. It's enormously good.
Yeah.
I mean, it's good for all assets that the government can't print. That's the point I made this morning. The story of our time, and I'm sure you agree with this because we've had this conversation many times, the story of our time is that the federal government is broken and cannot stop this doomsday machine of deficits and spending. And as a result, and the way they solve it, I mean, they can definitely keep it going, but they have to keep it going through printing and monetary debasement.
Yeah.
And so, as an investor and asset holder, you want to hold assets they can't print. And, Bitcoin's at the top of the list, gold's up there, silver's up there, real estate's up there. Anything tangible, the government can't print it. In terms of government dollar terms, it will be worth more in the future as a better store of value than a dollar or a bond. I mean, the bond is probably the worst store of value in the world right now, in my view.
The federal government is broken, the economy is collapsing, and money printing will not save it. That's the latest message out from Lawrence Lepid and Gary Cardone, who recently spoke on the current state of affairs and the role of Bitcoin as an inflation hedge. In their latest interview together, they point out why they believe a gold candle is coming for Bitcoin, due to the demand and supply shock that will play out over the first half of 2024. Moreover, they speak on how assets like Bitcoin and gold are vital for investors because they can't be printed by the government, making them perfect for safeguarding your wealth. Make sure to stick around until the end of the video where Gary Cardone reveals why the demand from the Bitcoin ETFs is still not priced in. Also guys, only a small percentage of my viewers are actually subscribed. If you enjoy staying up to date with finance content, consider subscribing or liking the video. It's free and you can always change your mind. Now here's why Lawrence Lepid and Gary Cardone think a gold candle is coming for Bitcoin.
The reason this whole thing happened, as you know, and I will point it out to the listeners, is that the Delaware court, ruled in favor of GBTC being an ETF. And so they, I don't think there's any way in hell Gensler wanted to do this, but he was forced to do this, knowing that if they didn't do it within the time frame specified, that the court was going to, they were going to take it in, they were all going to get together, take it into court. So he had to do it. And as a result, all these ETF players, they put their, they got their ducks in a row.
Yeah.
But again, it does take time. I mean, conversations need to take place. I mean, you don't just, have your RIA manager, call up all his clients day one and say, we're putting money into this thing. You've got to explain it. You've got to have written work that shows why it makes sense. You've got to talk about the Sharpe ratio. You've got to talk about historical performance. All these things, all these bricks need to be put into place. And they will be. And, not in years, in weeks and months. And I think, we haven't seen the God candle yet, but in my opinion, the God candle is coming because they will soak up the excess supply and then they'll just keep buying. And as we know, 70% of the coins are in hands where it's not going to move.
Yep.
Even right now, I'm sure, just because of the way the item trade, the Bitcoin item, it's because of the way the asset trades a little bit based on momentum. I'm sure there are people who, bought it at 48 or saw it at 48. Now they see it at 41. They're like, oh, I can wait. I'll get it cheaper.
Yeah, that's right.
And so,
if you're sitting on the edges outside of Grayscale,
yeah,
and it moved, you're gonna.
I'll
reload in a couple weeks.
Yeah,
let's put some pressure
who's
on this thing.
Who's to say it doesn't go to 36? And so you're sitting there, I'm in no rush right now.
Yeah.
I mean, it tends to, as we all know, it tends to FOMO up and then it tends to fear trade down. And I'm not saying it's going into the 30s. I kind of don't think it will. I think we're kind of bottoming here around 40. It's just my gut. But, it wouldn't surprise me if it went into the 30s. If it did, in my view, that'd be a super buying opportunity.
I've been surprised that it didn't already pierce 40.
Are you? Yeah.
Yeah, because this market wants news.
Right.
Right, we're starved for news.
Right.
That's what drives this price.
Yeah.
And if it's not any positive news, then I thought it would get sold off. And there must be some whales out there somewhere getting rid of some of their coins because somebody's doing something.
Maybe, or maybe it's just the GBTC money moving out and some of it hasn't been recycled. I think some of the people who are selling GBTC are probably going to move to self-custody. Yeah. And that takes time. Some are swapped. I mean, I know in my case, I had some GBTC and some retirement accounts. And what I'm going to do is just swap it right into one of the ETFs ETFs, probably
Yeah.
the Fidelity one for me, but that's just because I trust Fidelity more than I trust BlackRock. I mean, and I don't like ETFs, but most of my coins, or all my coins really, are self-custody. But when you have a retirement account where to withdraw, create a penalty.
Yeah, that's right.
I mean, it's the only way to play
Yeah.
this assets.
Compared to leaving it under the pillow, the
Right.
U.S. dollars, it has to go to work, generate
it's-
something, some yield.
Yeah, or be in an asset that can't be debased.
Yeah.
Because I think, as my good friend Greg Foss has always said, monetary debasement is just built into the system, the way the system is today. Now, that
Well,
could-
it is the system.
it is the system, right?
No,
well,
no,
that's
Ben,
yeah.
it is the system, Greg.
Now, to be fair though, that could change.
Really?
Well, let me say why. And I always say this because people ask me when they invest in my fund, they say, why? What's the risk here? What could go wrong? And tell them, and then they laugh, of course, because they know it's unlikely. Let's say the government got really responsible. Let's say the U.S. federal government said, you know what? We're going to means test Social Security. We're going to cut it back. We're going to cut back Medicare. We're going to cut back Medicaid. We're going to stop these wars. We're going to shut down all these military bases, and we're going to balance the budget, right? I mean, if that happened, the monetary debasement bet that we are all making wouldn't be nearly as possible. I think we're too far gone for that to happen. And I think even if that did happen, then the economy would fall apart because we'd have a massive recession. But
But wouldn't that be positive for Bitcoin?
yeah, it probably would because it can't go bankrupt. In a recession, if you look at what we're talking about, if they did that and we went that route, would be a massive deflation. It would be like the 1930s.
Yeah, that's what
And in the 30s,
Could we see that? Could we see that?
I don't think it's likely, but I think it's not impossible. And I say that because there's just so much debt, and the debt has to we have to resolve this debt one of two ways. We've either got to print to keep the system going, which is what we're in right now,
Yeah.
which is what we expect. But you know what? I mean, markets have a way of doing what you don't expect. And it's possible that even with all that printing, we still get debt going bad and we just get massive deflation. And I think about that a lot. And so we didn't have Bitcoin back in the 30s, but the 1930s, we did have massive deflation. And I'll tell you what was interesting about it. Gold was your inflationary solution, always has been pre-Bitcoin. What was interesting about it is gold did okay in the 30s. I mean, the gold price was fixed because the government locked the price at
Yep.
$35 after they revalued. But the gold mining stocks went up 10x. And more importantly, that gold price was fixed at 35, but the price of all other things went down substantially. So if you held gold, you didn't have your $35 an ounce gold going up in price, but you had your prices of everything coming down a lot.
Right.
The price in the 30s, your prices really fell. I mean, I know as an example, I've said it in other podcasts, my grandparents bought a house.
I was going to ask you, housing
And-
prices in the 30s. We forget.
Yeah, they bought
$3,500, right?
Right, they bought a house. I think it was $7,000.
Yeah.
That in 28 would have been, $20,000 or $30,000.
Right.
And that's because in a deflation, what happens is nobody has any money, and so the price of everything falls. And if you've got a sound money asset, I mean, it might fall. I mean, the nominal price of Bitcoin might fall. The nominal price of gold might fall in a
Yeah.
very big deflation, but the price of everything else will fall faster.
Right.
And I think it's a reasonably safe bet because of Bernanke's speech and the past 50 years of behavior of the Federal Reserve, that if we do have a serious deflation, they're just going to print like crazy. They have to. If you think about how a politician thinks, they think about, how do I stay in office one more year, one more day? How do I continue to get these benefits? I'm Elizabeth Warren. I've never made any honest money in my life. I'm worth $60 million. I really love this gravy train.
It's unbelievable.
Right? You want to keep it going. And so they're faced with a choice. Don't print and let the whole thing collapse and have a massive deflation, get thrown out of office.
Blame it on Trump.
And blame it on Trump. All the bad shit, right? Or print, admittedly you have inflation, but at least you get to kick the can and keep the game going. Trump will, in my opinion, do everything he can to keep the economy going. And,
He'll drive rates down and he'll print.
Right. And look, I mean, he'll be a different flavor than Biden in terms of the spending. There won't be all this woke spending. There won't be all this DEI spending. There won't be some,
War
stupid,
spending.
war spending, and a lot of things will be really good compared to Biden. But he'll face the same issue of, if I don't bring rates down, and when he was in office, remember he kind of went after the Federal Reserve a couple times.
Yeah.
And he'll do that again.
Yeah.
I mean, he's aggressive, and he'll get in there and just say, gosh, you got to take the rates down to zero again.
Yeah.
Or this whole thing's going to come unwound. I'm not going to stand for it. And so the pressure, I think he'll rile up his base, and so the whole country will be pushing for that. And so I think the pressure is going to be just enormous. If you want to grow your purchasing power, Bitcoin's a much better choice. But if you want to maintain your purchasing power and protect yourself, gold is the number 2 choice behind Bitcoin. If you can't stand the volatility.
Yeah, we've talked about gold before. If I'm remembering correctly, you could be bullish on gold, right?
Oh, I am bullish on gold, yeah.
Like really? bullish.
Pretty
if
bullish,
everything-
yeah. I mean, I can't guarantee it.
Yeah.
You know, nobody can, but gold will go up. There's just no doubt. You know,
You're talking about like 8 to 10x.
yeah. Well, that's the outside case. I mean, I think it's easily, you know, it's around 2,100, 2,050 today, something like that. 3,000, that's a no-brainer. 4,000 a few years out, I can see that too. But the big unknown on gold is what happens at the sovereign level, and what happens if and when we kind of get to the, just mapping this out a little in the future. Things are going to get worse. Inflation's going to get worse. People are going to scream louder, and at some point, there might become something that looks kind of like a Bretton Woods 2 or Bretton Woods 3, and a bit of a reset and an attempt to salvage the system with a sounder money. And sadly, I don't think the world is ready and the leaders are ready to do it using Bitcoin as the better form of sound money.
So there's Gary Cardone and Larry Lepid with their expert analysis on the current state of the economy and the role of Bitcoin in hedging against inflation. Their insights shed light on the potential for Bitcoin to serve as a safeguard in uncertain times, highlighting its value alongside traditional assets like gold. As they discuss the possibility of a significant uptick in Bitcoin investments and the ongoing uncertainty surrounding the Bitcoin ETFs, it becomes clear that the landscape of finance is evolving rapidly. With their perspectives in mind, investors should consider diversifying their portfolios to include assets like Bitcoin that offer resilience in the face of economic challenges. Before we go, a quick reminder for those who are keen on staying updated in the fast-paced world of crypto and Bitcoin, consider subscribing to my daily 5-minute crypto newsletter. It's a concise resource for the latest expert predictions, breaking news, and top on-chain analysis trusted by over 50,000 subscribers for insightful crypto investment information. Click the first link in the description to join our community and elevate your crypto investment knowledge today. Anyway guys, hope you all enjoyed today's video and that provided you with some value. I'll see you all in the next one, and as always, all the best.